Are you tired of consistently losing the trades that you place? Are you in the dilemma that whenever you place your trades, they seem to go into a very small profit, then they reverse and go into a very huge drawdown and possibly even hitting your stop loss early? Or are you taking very small profit out of the market? I was caught up in a dilemma like that for over 2 years. When I just started trading, I was finding myself unprofitable, losing consistently in the forex market until I fixed the thing that I'm going to show you guys on the charts. Guys, this is another video that I'm bringing for you. I hope you guys are finding value with the content that I'm providing for you guys here on the channel. If it is your first time, my name is Matthew and I'm Forex Trader. I do many videos like this on this channel. So if it's your first time, if you don't want to miss any videos, do subscribe to the channel. Don't leave the video without subscribing. Drop a like on the video, comment with your questions down below. So without wasting any time, guys, let me take you onto the charts and I'll show you guys exactly what you should do to avoid losses in the market and start to profit. So we are here on GBP USD chart. It's the 1 hour chart. So what I want you guys to do, or what I want to explain to you, is something that probably you didn't know, or you are actually doing this unaware. Okay, so many traders actually know how to do technical analysis. You'll find that this is resistance. Okay, for example, yeah, you can find that this is a support. You know how to draw your levels perfectly. Okay, you're trading perfectly, right? So you know how to draw your levels. But why is it that you are always in losses? Guys, this is one of the things that really disturbed me, something that stressed me a lot in the market. And when I discovered this, what I'm going to show you today, guys, it really changed the way I trade. And I hope that today, when you see what I'm going to show you today, it will change the way you trade. So for example, you've drawn your support and resistance levels, right, like this, okay? And why many traders lose and why I was also losing in the market is because of poor timing, okay? Poor timing, not timing the market correctly, okay? Jumping into trades too early or jumping into trades too late. For example, you're here, you've drawn your level of support here. For example, yeah, you've drawn, let me just do this. You've drawn your level here. You can see, maybe you saw that there's a first touch, then a second touch here, then the market goes up, assuming you waited for it, the market comes back to this level, okay? Comes back to this level. But the market comes back to this level when you're not on your chart, okay? For example, you're busy, you've not been seated on the chart, because for the market to come back here, it will take around 2 days, okay? Around 2 days. And maybe it came to this level when you're asleep, depending on which time zone you are in, right? So when the market comes up to this area here, probably you are asleep or you're busy doing something else, and then you come to the market while the market has reached somewhere here in the middle, okay? It has reached up here in the middle. Let's say the market is around this area here, okay? You find the market around this yellow line, okay? Around this area here. That's why you're finding the market. So you come and then you get what we call fear of missing out on this trade here, because you saw it reached your level here, which is a good level. So you believe the market is going to buy from there. So what many people do, including myself when I just started trading, is when they see this area or see this bullish candle continuing upwards, they jump in on a buy here, okay? They jump in on a buy here, and then maybe they put their stop loss just below that area like that, okay? You put your stop loss there, and then you are targeting maybe these previous highs, right? Like you're targeting either here or you're targeting here, okay? And when you come into the market and you enter this trade and target those highs, what normally happens is that the market is most likely to retrace because it has already moved some pips away from an area of value, okay? So it will create some sort of retracement or a breather before continuing up. Now, I was a victim of this kind of trading here, where you jump into the trade while it is in the middle or no man's land, where there is no level of structure whatsoever. Okay, so this kind of trading is what causes many people to continue losing in the market. Now, I'm going to show you many examples. Okay, I've shown you that example. You come to this area here. Okay, let's say the market is here. It's created one touch, first touch here. You see it came back and created a second touch here. Okay, you've drawn this level on after the second touch. You drew this level, projected this to the future. Okay, let's assume all this other price action here, all this price action here has not yet happened. Okay, so you are just you've just drawn this level here. For example, let me show you. You've just drawn this level like this because of this double top. Okay, so you project this level to the future, hoping that in future it will act as a good level. So indeed, market goes down. Okay, market goes down, does not reach this previous level, then it starts going up. Okay, when the market breaks above this level of yours here, you don't wait for a retest, because you've seen this bullish engulfing candle here. Okay, a strong bullish candle. You jump in on a trade in the middle or after the market has moved away from an area of value. You jump in. Okay, let's say this candle closes bullish, and then the next candle closes bullish, and you think, okay, the market is gaining momentum, let me jump in for a trade. Let me put my stop loss below this level, then let me target a 1 to 2. Okay, like this. This is how I used to place my trades. Okay, and this kind of trade placement will cause you pain. Look at what happens. The market goes slightly into profit, reaches this level here, okay, and then it reverses on you. This is not market manipulation. You are not being manipulated. You are simply entering the market in the middle of nowhere, okay, in the middle of nowhere, where there is no level of structure whatsoever. You can see no structure here. This is just no man's land. Okay, dead space in the market. You enter here, market will not remain in a dead space. It will retrace to pick more orders at areas of value. Okay, so you enter a trade there, you get stopped out. Market comes back to this level here of structure. Okay, so you see this level and you say, oh, this is a good level of value for me to buy from. The market pulls up. Okay, gives you 1, 2, 3 bullish candles, 3 white soldiers. Place a trade there. You put your stop loss at this low, okay, or at the low, this low here, okay, and then you want a 1 to 2. You see, that's a 1 to 2. You move this forward, hoping for a 1 to 2. Do you see what happens? The market does not reach your 1 to 2. It comes and takes you out. Now, this is what happens to many traders around the world. Why? Because you are not trading correctly at areas of value. Now, let me show you an example of trading at an area of value, okay, and how different it is from trading just within no man's land. But before I do that, let me show you what is currently happening and what might happen to many traders. Now, there is this area here of demand, okay? There is this area of demand. Let me show you that area, right? There is this area of demand in the market right now. This is a current chart for GBP USD, the 1 hour chart. So there is this area of demand which was not fulfilled. You can see the market cleared this high here. Market went and cleared this high, okay, and created this demand. So market usually pulls back down to demand to pick up more orders before it goes up, but that has not happened. So there are some other demand zones here which were filled, but this one was not filled. So the market will gravitate towards that demand zone to pick up more orders, and that's what the market is doing right now. Okay, market is pushing. So I believe on Monday, I'm recording this video on Sunday. So I believe tomorrow morning, these candles might continue lower, okay? Might continue lower to demand, right? Before the market goes back up, probably even break this level, retest, and then continue pushing up, right? Or market might come to demand, break below, and how they call this, when market breaks below the demand, it will have mitigated that demand, right, to about fulfill that demand, right? And then that demand will no longer be demand, and to market will just continue falling lower, right? These are the scenarios that might happen to this currency pair. But let me just show you why I am telling you that, all right? So many traders like myself, when I was trading and making really bad losses, well, this is what we do as losing traders, okay? As losing traders, what you are looking at now is this momentum here, okay? This momentum is what you're looking at. Now, this momentum here, many traders, novice traders, will come and jump in on a sell here, and they'll put their stop loss at this level like this, or even at this area like this, and then they'll look to target a 1 to 2. This is what most of the traders will do, okay? Let me just change this text to black. Yeah, so this is what most traders will do, most novice traders. So normally when you take a trade like this, when the trade is approaching an area of value like this demand area here, okay, you are putting yourself at risk. You are putting yourself at risk because the market can easily come to this area, fill up this demand, and then push up, take your stop loss here, push upwards. And then you start saying the market is being manipulated. The market is not being manipulated. You are just taking your trades at wrong times. You are not timing your trades correctly. Your market direction may be correct, but you're jumping in late. For example, this market direction is correct for a sell, okay? But you cannot start selling at this point because you're late. You are supposed to sell up here, okay? When there is this 1, 2, this third touch here, you time this third touch. When this bullish candle pulls into this area, okay, you put maybe your sell limit order here, and then you sell from here and move with this momentum. You should learn how to time entries on top of the market for sells and at the bottom of the market for buys, okay? Don't enter trades when the market has moved into no man's land. Like right now where the market is here, this area here, there is no structure to the left, okay, apart from this fair value gap here, which also has been filled up, right? I hope you guys see that, right? Let me show you that. There is a fair value gap there that was filled up. You see, here, there is a fair value gap here, which has been filled up by this price and even broken under. So this price is most likely to come into demand, okay? It might come into demand here like this and then push higher. Now, many traders who sell from here are going to get stopped out. And that is why people keep on saying the market is manipulated while you are placing entries in the wrong areas. Let me give you just one more example and then I end the video. You can see that this is an area, okay? That's an area, right? So you find your first touch, second touch, then you draw in this. For example, you drew this as a double bottom, you stretch it forward. You're waiting for market to come back there for you to place your buys, right? So the market comes back here. You are not what? You are not around the market. You miss this entry because you are waiting maybe for price to give you some kind of confirmations, or you are busy somewhere, okay? And then this price goes up here. Then you say, okay, let me wait. The price comes back here, and then it gives you this bullish engulfing, And what happens when it gives you this bullish engulfing? You jump into the trade. Jump into this trade here, you time it well. Why do you put your stop loss? Put your stop loss just under there. Then you're targeting a 1 to 2, 1 to 3. Look at how you stopped out. You stopped out with this wick. Why does this wick stop you out? And what wrong thing have you done? You have done nothing wrong here. Okay? You have done nothing wrong here. But why are you being stopped out? Is what you are asking yourself. Why am I being stopped out here? Okay? You are being stopped out because you did not see that behind here there is a level. Okay? This price is coming into a level here. You're getting the point? It is coming to clear this level here. Under here there are many orders. Okay? Under this level there are many orders. All right? So you have to look at the general structure. You can be looking at this small level. Let me show you. You look at this small level here and you don't look at the bigger price level. Like there is a level here, okay, which is bigger, which has more touches. 1, 2, 3, 4. It has more touches. You're looking at the small level, not looking at the bigger level. So you are trading at a wrong pricing level. You enter a trade here, put your stop loss on the small one, you are stopped out. But if you had seen this bigger level and you put your stop loss below that level, this trade would put you in a win. So I want you guys to go and look at this. Try to time your entries correctly. Time your entries based on real full structure, not just the small ones, okay? Look for full structure, right? Let me show you an example of this again so that you don't forget, so that you can use this as let's say yardstick for you to place your entries. Okay, let's say you're trading trend line. Okay, trend line breaks, all these patterns, right? You're trading this pattern like this, right? Let's assume you're trading this pattern. See the price going up, first touch, second touch, comes to make a third touch here. Okay, when it makes this third touch, what do you normally do? You would buy on the trend line. Most traders would place a buy here on the trend line, stop loss below, then they would target a 1 to 2, 1 to 3, right? But you can see that the market goes up into profit just slightly, then quickly stops you out. Quickly stops you out. Why does the market stop you out here? Because you entered here on a buy of the trend line. You're entering a buy. It stops you out because you did not see, you did not look behind this side to know. Let me take this out so that I show you clearly. It takes you out because you did not see that here was a manipulation move. I don't know why my tools are not drawing. Okay, so there was a manipulation here. Okay, you can see that this is a high. Price goes because there are orders, many orders seated up here. Okay, so price goes, picks up those orders, pushes down. They are not enough. Price goes back again to make equal highs, taking out all the stop losses which are up here, or picking up the liquidity up here before falling down. So for you as a person, you go around saying, oh, the market is against me, all that kind of stuff. You talk about it, but you did not see that there is a manipulation here, manipulation level there. So how do you draw, or how do you know these manipulation levels? Just look at the market creating the highs, okay? And if those highs are taken out and the market falls lower, you know there's a manipulation there. For example, here there was a high. That high was taken out here and the market pushed below the high. You know that this area here could be having a manipulation that should be filled, or many orders up here that has to be filled. So you wait for the market to give you signs of complete mitigation of orders, or filling up of orders up here before selling off. Don't buy after at this area, because you're buying here into this liquidity, okay? You should sell from that. You should jump in on a sell so that you can also ride the market with the banks, okay? I think that will summarize it. I don't want to make the video very long. Just wanted to make this go down or nail it down for you guys. Let's see. I want to get for you a good level to trade. Okay, let's see. Let's say this is your level you've drawn on here. Market goes there once, goes there twice. On the third time, okay, you come in late and you want to take your trade like here, okay? You want to take your trade from there, right? And you want to put your stop loss here, 1 to 2, right? You want a 1 to 2 like this. Look at how the market will make you feel pain. It comes close to take profit, then it goes up into a very big drawdown up here, almost hitting your stop before then falling lower. If you want to avoid this kind of moves, don't enter the market late. Try to catch these moves as they are beginning to happen. Like here, you do enter the market just after that second touch, put your stop loss there, and then look at how you do get your 1 to 2. You get your 1 to 2 before the market even retraces. You can see this goes into a 1 to 2 before the market even retraces. So if you want to reduce on your losses, try to time your entries. Get your entries correctly, okay? Get your entries correctly, right? You see this? This is the last one, guys, as I close the video. First touch, second touch. On the third touch here, don't start selling when you find the market here, okay? Don't start selling when you find the market there. You will not get a good win rate, okay? You will get trades that are almost going to hit your stop loss like this, okay? Try to enter immediately the market touches. Immediately the market touches, there comes back to that zone. You place your entry so that you can have a good tight stop loss, and then you have your trades reaching, take profit before major retracement. So guys, that is the video. If you have any questions, ask in the comment section. I'll be able to come back with another video. Thank you guys for watching.